Hope everyone's having a great morning. All right, so welcome. I will, the video and audio might be a little glitchy, I'm noticing, because I'm actually still starting up my Think or Swim. It's taken at this point over 45 minutes for it to start up. So if it bogs, it's because Think or Swim is taking an inordinate number of resources and has yet to actually start. So if you all haven't started up your Think or Swim, uh, give it a whirl, because hopefully it's just isolated to down here in South Florida, but no joy. All right. So as always, gang, welcome. Happy Monday. Let's kick off our session of Charts and Coffee with a quick look at what's happening on the S&P. Of course, I'm using my Trading View. It's working just fine. By the way, powered by my TradeStation account. And if you are trading futures through your Trading View account, remember, Trading View is not a brokerage. They're a charting platform that works with a number of brokerages. They're broker agnostic, and they have a number of platforms that they support. So if I'm looking at the S&P, and if you are looking at the S&P on TradingView, make sure you've got a real-time feed, or just pay the CME, the whopping $5 a month, and you can get the data for the indices. That said, we are trading above the 200 propulsion on the 5-minute time frame. While we do not have an uptrend, hard to be overwhelmingly bearish. I'd like to see what side of the close, the previous session close, we ultimately settle on. But getting above 46.60, getting above the previous session close, if you want to look at it another way, getting above the, here we go, the Friday, 4 p.m., 1600 candle will be a big deal. So we want to be above where the cash close was, and that's the 4 p.m. close. All right. And let's see here. What else do we have? Okay. So next up is what's going on with the bond market. I'm going to move the clock over to the center here. All right. So what's going on with the bond market? Long bonds are going to be in play this week. And we have FOMC. Okay. We have FOMC coming up on Wednesday. That means this is going to be the last time we hear from Jerome Powell. This is the last monetary policy statement for 2023. And this is the tone we're going to take into the new year. Expectations are that the Federal Reserve is going to cut. Now, when I say expectations, ultimately, what that means is there's a contract called the Fed Fund Futures. And Fed Fund Futures, they have one job. Their job is to basically allow us traders to speculate on what is going to happen at the meeting that contract is reflecting. And when we look at the Fed Fund Futures, there's a contract associated with each meeting date. So we can look at the Fed Fund Futures for that meeting date, whether that be Jan, March, May, June, July, and see where the Fed Fund Futures are expecting the rates to be. Based on that, and believe me, the Federal Reserve knows where these are sitting. Therefore, our expectation, based on where these are at, things like the dollar, the euro, the bond market notes will move in anticipation of what the Federal Reserve is most likely to do. Fed Fund Futures are remarkably accurate for two reasons. One, it's their only job. Bonds' only job is not to reflect what's happening with the Federal Reserve. The euros or the dollar's only job is not to reflect what's going to be happening with the Federal Reserve, because these are constantly dealing with multiple central banks and multiple catalysts for movement. Fed fund futures have one job. They're not looking at indices. They're looking at what is the Federal Reserve going to do based on, what it is, inflation and jobs, et cetera, are doing. Anyway, the other reason it works so well is the Federal Reserve knows that by defying what is highly discounted, usually 80% plus, they are going to create chaos in the market. And believe me, while they seem like they might be chaos monkeys, that is not what the Federal Reserve really wants to do. So that's why I say it's a two-way communication device, where we collectively are reflecting the view via the Fed Fund futures, the view we have of what they are going to do. And the FOMC knows that if it's not going to be what's discounted, there will be a massive, violent adjustment. So keep an eye on the Fed Fund futures. They are remarkably accurate. We are expecting rate cuts, one, if not two quarter-point cuts by the time we get to July. Hard to be a bear in indices based on that. So that's where I sit. As I go into the end of the year, the window dressing rally arguably has begun, and not across the board, gang. Remember, not everything is going to benefit from the strength gets stronger and sort of the Santa, which doesn't come up until about the 22nd, but the Santa rally, the window dressing rally, not everything's going to benefit. This is not a high tide lifts all boats scenario. This is more along the lines of window dressing, meaning what can I put in the portfolio? What can I put in that showroom window to make it look like my portfolio looks, well, really good? Is it a little disingenuous? Of course, window dressing has a superficiality about it to begin with. So, doesn't matter whatever we may or may not think of it. It does happen. I love when people say, no, there's no window dressing. Okay. But that being said, let's just go with what it is that's happening. And we want to stick with the strength in tech, communications, consumer discretionary, and financials. Energy continues to lag. Healthcare continues to lag. Industrials are doing quite well, right? So those of you that are fans of Boeing and Honeywell, keep an eye on those. All right. So questions. Here we go. So Stephen asked, I mentioned last week my sector portfolio was up good year to year. Do I mind providing a number? Stephen, I keep that for members. No, and it really doesn't matter. No, I keep that for members. I hope you understand. But ultimately, I can tell you the kind of things that we are in. We are in things like XLK, XLB, XLP. I did get stopped out of 3 positions. We did have 3 stops. They were all individual stocks. Most of the portfolio is focused on ETFs. And I will also say too, even when members come into the room and they say, hey, what is the portfolio? Stephen, I give them a very similar answer. It doesn't matter. It only matters what the next entry is, because here's the problem. Let's say I tell a brand new member that we're in XLK, for example. That was, I think, the second position we built back in October of last year. But here's a weekly chart. Here's October of last year. We built this position between 121 and 122, if I recall. We're trading at 186. If my saying we've got XLK does not also include where we entered from, what is my cost basis, I'm going to set some folks up for some pain, right? So that's why I say everything, for 2 reasons. Everything's predicated on not even what I'm in, but the price from which I'm in it. And then at this point, this portfolio is about a year old. And maybe at some point we'll sit down and do something like Stephen. But yeah, right now we've just been discussing that with members. So thanks again. What are my thoughts on ARM long? I'd like a pullback, Ben. That's really it. I don't have any. Frankly, Ben, I don't know where Alpha Metallurgical Resources would land me in terms of high concentration weighting and the sectors that it would move with. I have no exposure here, but I will tell you there's a really nice Darvis accompanying volume ledge right around 280. Whether or not we pull back there, don't know, but I would focus on the long side, but not from highs. Yeah, not from highs. Um, my pullback idea at minimum, I would say, Stephen, look for about a 23% pullback at least from the Tuesday low, Tuesday, November 28 low to the Wednesday, December 6 high. Okay. All right. Next up, what's going on with Google on the daily time frame? Going sideways. It's really choppy. That's what's going on. That's what's going on there. Very choppy and sideways. Ultimately, what we want to remember is that I would not put Google at the top of any list of names that I want to focus on to the long side. In fact, Meta, Google, Tesla of the Magnificent Seven, not so magnificent, right? It's really maybe a magnificent five right now. Microsoft down. Jump on over there. It's just a pullback buy. Not on the daily time frame, not enough for me. Green eggs and ham, no. I would need something a little bit more significant. This could be maybe an hourly time frame entry. This could be maybe, I'd prefer to see something a little bit more substantial. We might day trade it. But no, that's, trading down near, say, the bottom third of Friday's candle, that's typically not going to be enough of a pullback for me, especially on a daily time frame. Now, that said, the 5-minute chart, if we can have a nice green uptrend here on the 5-minute chart, maybe we'll day trade it, but we'll go from there. Let's see here. Bear with me. I'll tell you what, I am really missing having my toss charts right now. Usually I have 9 screens of toss charts, and while I love TradingView, it really isn't my primary charting platform, which, as I take a look at how used to I've become multiple charts, I like to mention that, because if you can get at least 2 screens on your trading desktop, if not more, 4 is really nice too. The rig behind me, the one my husband was using from time to time, has a 4 array layout, and you can run multiple charts on TradingView as well. But one of the things that's really nice, if you have at least 2 screens, is you've got maybe half a screen dedicated to the chat room, maybe another half a screen dedicated to your charting platform. Your trading platform, and then ultimately the charts that you're using. And one of the arrays that I use at my other office is here. Let me show you what I do here. I don't know if it'll show up the way I do it there. So I've got 2 43-inch monitors at the other office, and I have this, where is it, 43-inch. So this is the left screen over there. And what I've done with there you go. That's what I'll do. When I have enough real estate to do it, I'll run multiple instances. And this is what I'm ultimately going to have to rely on. I'll run multiple instances of charts with my indicators, and I'll try to squeeze in 4, 6, or in this case, 8 charts per screen. All right. Let's see. Wow. Yeah, I'm still sitting and doing absolutely nothing on Thinkorswim. So I don't know what's going on there, but all right. So if I'm looking at, say, Microsoft for a pullback buy, for example, I would want the daily price movement range, right? So let me plug that in. I'm going to open this chart up. All right. So if I'm looking at Microsoft on the daily time frame, it'd be nice if I type it in right. There we go. If I'm doing that on the daily time frame, you'll see where the idea to pull back would come from if I'm using volume. So remember I said I would like that Darvis level. Do you see the Darvis and the volume ledge? That's the kind of stuff I would like to take advantage of. And that's not that far away. But, someone was asking, hey, should we wait for Kapow? And that's a really good point. I think there's a lot of merit in waiting for Kapow, absolutely. Could he upend the environment? Yeah, no doubt. No doubt. We could see a significant move on Kapow. And then you'll see where my daily price movement ranges are 367 to about 365. Those are going to update every single day with the fresh volatility zones. But no doubt, Kapow could be a very good catalyst for that. And that's what I'd like to use, right? If we think about the most important data event, I mean, CPI is out there, but not more important than Powell and the monetary policy statement and the press conference. So yes, would that be ideal with Wednesday? I would say whether it's SPY or anything else, Dr. Watkins, some of the best swing trading timing will be with Powell, no doubt. Had to reinstall TOS. Yeah, Michael, I noticed my TOS icon. You know, it's so funny you say that. My TOS icon changed colors. Yeah, something's not cool. Yeah, I noticed mine was blue as well this morning. Yeah. All right. Now, yesterday we were running on, and what my main issue about this is I can watch it on my screen that I'm getting some glitch because right now this pig of a program is eating up a lot of resources. I'm looking at my task manager right now, and this computer is no slouch. So heads up, if you're in the same situation I'm in right now, just so you know, because everything else is going to be affected by one program sitting around and spinning in circles. 30% CPU. This program is sitting right now for the last 45 minutes plus trying to install updates. So if you're trying to trade this morning and you're using another platform, shut this pig off because, like I said, I'm looking at 30 to 38% CPU hoggage. So something to think about. All right, if you're going to try to trade and you're waiting for TOS to wake up. All right, what's the difference between the US 100 and the ES? Satisfaction real? That sounds like a CFD. That sounds like a CFD. I don't know what the weighting is. Check the weighting. Check the weighting. But I don't know what's in the US 100. It sounds like a CFD, a contract for difference. Do they trade the same? No clue. I'd have to know what's inside of the US 100, and I'd have to know what the weighting is. So I actually do not know. Yeah, so that's the Schwab thing. Weird. I did not get an email or anything. Wow. All right. Anyway, that's my switch to Schwab. Yeah. So if it's a 100 anything satisfaction real, that's probably the NASDAQ, right? Think about the S&P is 500 stocks. The Dow is 30 stocks. If you're looking at something that's 100, it's probably the NASDAQ. So go take a look at the weighting on how that's constructed. Don't presume it's high concentration weighted like the NQ with a QQQ. All right. So nothing like a Monday morning dealing with tech issues. I hope I'm not whining like Patrick Mahomes after the Chiefs game. But it is frustrating. All right. Let's see what else we have here. Okay, yeah, there's some network issues. All right. All right. Yep. So a lot of folks are dealing with it. I didn't think I was alone. That's for sure. All right. I did not. So if you take a look at LCID, sure. LCID, I don't have any exposure to Lucid, and I'm going to go back to my other screen here, and then we're going to wrap up our show. So if I'm looking at LCID, again, daily time frame on this, open up my daily, and I haven't been looking at this much, but I will say it's broken the downtrend recently. It's still well below the 200 period. It's negative on the year, but here's the thing: I don't trade sub $10 stocks for the basic reason that it becomes a volume game. Yeah, Ahmed, it's a volume game. Once you start looking at sub 10, even sub $20 stocks, it's really less about price and more about price based volume. Yeah, price based volume. All right. So I would say ultimately what we want to do is think about where is the volume and get a lot of volume around $4.30 on Lucid. All right. Okay, gang. Thanks as always for joining me for Charts and Coffee. I'll see you tomorrow. Same time, same station. Be good to each other.